Excellent. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you are gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Good day, grade 12 learners, and welcome to today's subject lesson. My name is Nikki Wezulu, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center and the broadcast by Pakama Research and Development. We are so excited to have you guys here. We hope you're going to enjoy today's lesson. And without any further waste of time, I will go straight to our subject. Today, I'm going to be presenting for Mathematical Literacy, grade 12, with special focus on the topic of finance. And then, as we all know, that finance is a very big and broad topic. Under finance, our special focus is going to be under financial documents. Now, girls and boys, we have our active WhatsApp line, which is 082 760 2630. So you can use that number to interact with us. Please, you are not allowed to make any phone calls or video calls. You can only send a WhatsApp message, and then my colleagues here in the studio will interact with you. So if you have any questions or you want to answer a question, you're more than welcome to do that via our WhatsApp number. So without any further waste of time, guys, let's go straight into our topic. Now, guys, I know most of you have been doing Maths Lit from grade 10. You did it in grade 11, and again now in grade 12, you are doing Maths Lit. So our topics are still the same. We still have 5 topics in Maths Lit. The first topic is your finance. You have your data handling. You have measurements. You have maps, plans, and other representations of the physical world. And the final topic is probability. So our topics are still like that, just that now they have different sections. So in addition to what you've already learned in grade 10 and 11, there are new subsections that you are going to learn in grade 12. And then, like I said, that today's focus is going to be on finance. And like I said, that finance is a very big topic. It's actually the biggest topic in mathematical literacy. So these are the subsections of finance. You have financial documents, you have taxation, there is the tariff system, income expenditure, profit or loss, income and expenditure statements and budgets. There's cost price and selling price, break-even analysis, interest, banking, loans and investment. There's inflation, and the last part of finance is exchange rates. So all these topics would never be able to do them in one day. For today, our special focus is going to be under financial documents. Girls and boys, every adult, the most important skill that you need to possess as an adult is a financial skill management. So you guys as Maths Lit learners are very privileged because you get to be taught about this skill from high school. You will see that under financial documents, you are actually taught how to handle your finances, how to manage your finances, and the different financial documents that you deal with on a daily basis. The financial documents that you come across, it's your everyday things like your till slip when you go to ShopRite, maybe to buy your milk and bread. They give you a slip to show that you purchased those items from that particular shop. If you go to a furniture store, maybe you want to purchase a washing machine, they will give you a receipt as evidence that you bought that washing machine from that particular store. And then for your parents, they normally get the monthly statements from the municipality that shows them the amount of water that they used and how much they're expected to pay. Now, as an adult, no one taught your parents how to interpret those statements. They had to learn that by themselves. So you as Meslit learners are very privileged because you are going to be taught how to interpret those everyday financial documents. Now, on the section of finance, we have the terminology that we are going to come across as we interact with different documents. So it is very important that you understand every single document. Your teachers are going to give you a glossary of terms with all the terminologies. You need to make sure that you understand every single one of them. Should you be asked to explain them, you should know how to explain them because this is also examinable. In your exam paper 1, you may be asked to explain any term. They can ask you, what do you understand by tax? They can ask you, what do you understand by debit? They can ask you, what is hire purchase? So in matric, you are expected to know how to explain all those terminologies. So for today's lesson, like I said, that finance is a very big topic. I won't be able to do all these sections in this 1 hour 30-minute session. We are only going to focus on financial documents. So the terminology that we are going to come across for today in the small section of financial document is the following. The first one, it is your account statement. When you talk about an account statement, you are talking about a record of transactions showing the items that were bought on credit. A practical example, if maybe I have a clothing account with Jet. When I have a clothing account with Jet, it means that I cannot afford to buy those clothes cash. So I go to Jet and then I take the clothes and then I use my card, my account card, they swipe, I go home, I didn't pay a cent. At the end of the month, Jet Store will send me a statement. That statement will show that for the month of December, I took clothes that are worth this amount and they're going to charge me interest of this amount. And then at the end of the month, I'm expected to make a minimum payment of a certain amount. So that letter that has a summary of the items that I bought and how much I should pay is called an account statement. The second one, it is your opening balance. When you talk about an opening balance, it can be in an account statement. It can also be in a bank statement. Opening balance, it is the amount of money in the account at the beginning of the period. Let us say on the 1st of January, I went to the bank and I requested my bank statement. So on that day, the 1st of January, when they print the statement, that amount that reflects, that is my opening balance. At the start of the statement, that amount is an opening balance. And girls and boys, note that the opening balance will not always mean that you have the money in the account. When your opening balance is positive, it means you have money. But there are going to be days whereby when you get your statement, you have a negative opening balance. Then that would mean that you actually don't have money in your account, but you actually owe the bank. That is when you say that your account is in arrears. You owe the bank. So opening balance does not necessarily mean that there is money in the account. So opening balance, it is that money at the start, at the beginning of the statement. And then we have a closing balance, as we know that closing is the opposite of opening. Your closing balance, it is the amount of money in the account at the end of the period. I'm going to continue with my practical example. On the 1st of January, I went to a bank and I requested a bank statement from the 1st of January. Now, you need to be specific when you want your bank statement, that you want it to be from what date up to what date. So I would have asked them to give me a bank statement from the 1st of January up until the 10th of January. So today, on the statement today, that amount that is on the account on the 10th of January, that amount is my closing balance. And again, it's going to depend that the closing balance, whether it's a positive or a negative. If it is positive, it means I have a closing balance. I have the money in my account. But if the closing balance is negative, then it means my account is in arrears. I actually owe the bank. I hope that makes sense. And then we have a budget. Guys, a budget is a list of expected income and expenditure. Most of you confuse budget with the actual income and expenditure. A budget is more like your wishful list. It's what you are anticipating. It's what you are expecting, that I'm expecting that this month, like for example, the previous month, since it's December, when you sat down and did your budget, you were obviously expecting to spend more money since it's the festive season, it's the holidays, everyone is just happy, is celebrating, so more money will be spent. And then people that normally get bonuses when they budget, they know that they'll also be getting a greater income, unlike the other normal months. So budget is your wishful thinking, it's what you are planning to spend, it's what you are anticipating. The actual money now that you spend, now that one is your actual income and expenditure statement. So please don't confuse the two. Your budget, it is a list of the expected income and expenditure. You are expecting to spend this amount. You are expecting to receive that amount of money. But we know that it cannot always go the way that you expect it to go. Sometimes you get less than what you were expecting. Sometimes you spend more than what you were expecting. The next item is credit. As I was explaining the opening and the closing balance, I was talking about the values that can be negative, the values that can be positive. I actually wanted to use the words credit and debit, but then I realized that I have not explained the meaning of the words credit and the meaning of the word debit. Credit means the money that is coming into a client's account. So you will see this normally on your bank statement. You will have the transactions and you will have a column of credit, a column of debit. So you must know that the column of debit, it means all the money that is coming inside the account. It's always normally indicated by a positive sign. Whereas a debit, it means all the money that is taken out of the account. It can be debit orders, it can be a withdrawal from the ATM, but as long as the money is coming out, then it will be indicated on the section of debits. And sometimes other textbooks or other question papers, they will indicate it with the minus sign. That if the positive and the minus signs are not indicated, you must just remember that credit coming in, debit going out. And then we have interest, because when you have a clothing account, we are buying clothes on credit, so the store needs to benefit from that. So for them to benefit, it means they'll have to charge you interest on those clothes that you are taking on credit. If you go and take furniture from Lewis maybe, and then you take that furniture on credit, they are going to charge you interest. Even when you have a bank account, if you are running low on funds, the bank is also going to charge you interest, meaning you are going to end up owing the bank, depending on the type of bank account that you are using. Again, if you have money in your account, then it means now your account will accumulate interest. So what is interest? Interest, it is the extra money that is added on the money that is owed or on the money that is invested. This one depends on the context. Sometimes, like I said, that if you have money in your account, then your money can accumulate interest. But if maybe you're taking clothes on credit from a clothing store, then they're going to charge you interest. So you must just remember that interest is the extra money that is added on the money that is owed or the money that has been invested. A till slip, this one most of us are very familiar with. It is a receipt which serves as proof of payment for goods that have been purchased. And a practical example, if you go and buy milk and bread from Pick n Pay, when you get to the till, you pay, and then after paying, they will give you a till slip. A till slip is the only proof that you bought these items and you bought them from Pick n Pay. And then on the till slip, you will normally get information like the name of the store, the contact details of the store, the items that you bought, the name of the cashier, the date and the time which those items were bought. What is the aim? What is the purpose of this till slip? In case you get home and you are not happy with the goods that you bought. Let's say you get home and you discover that this milk has expired. You are able to go back to the store and say, hey, Pick n Pay, I bought this milk from you guys and now I'm not happy with the milk. And then the first thing they will ask is that, can you please have your till slip? If you don't have a till slip, unfortunately, they cannot help you. Even if you can tell them, but that lady that is at the cashier saw me, she knows me, or the security guy at the door saw me, he knows me. Unfortunately, they cannot assist you. The only way that they will be able to help you is if you produce proof, evidence that you bought that milk from them. And that evidence is what? It is your till slip. The second financial document, it is an invoice. What is an invoice? It is a formal list of goods or services that have been delivered and the amount that is owing. The other word for invoice is actually what is actually a bill. A practical example of this one, normally when you go to restaurants like your Spare, John Dory's, any restaurant, we get in, we sit down, you get the menu, you order the meals that you want, we eat, and then after eating, the person that is serving you will come and bring you a bill. The bill will show that, okay guys, you bought this and this and this and that, and all the food that you bought and ate total to an amount of this much. Now that bill, that is an invoice. You've already utilized the goods, and then now you need to pay. So that is what you call an invoice. So it is a formal list of goods or services that have been delivered. The food has been delivered. You ate them. Now you must pay the money. That is an invoice. And then we have a quotation. Most people struggle to differentiate between invoice and a quotation. A quotation is a formal statement of goods or services to be supplied and the cost thereof. So with the quotation, they give you a list to tell you that, okay, you said you wanted 1, 2, 3. So if you want one, this is how much it will cost. Let's make a practical example. If maybe your school wanted to order textbooks for the grade 12 learners, they want to order Meslit textbooks for grade 12 learners. We know that Meslit learners are too many at schools. Let's say your school has 200 Meslit learners. So before the principal can make a decision that they're going to buy textbooks from shop A, he needs to get the quotations. Like shop A will tell them that, okay, principal, you want 200 textbooks for Meslit learners grade 12. I, as shop A, I will give you those textbooks for 100,000. And then shop number B will say, okay, principal, I see you have 200 Meslit learners and I have those textbooks that you want, but I will give you those textbooks for 120,000. So both shop A and shop B, they submit their quotations to the principal. And just because the principal requested a quotation, it does not mean that he is obliged to buy those textbooks from any of those shops. So the principals can use those two quotations and check which one gives the best value for money. And then the other thing that you must take note of when you work with quotations is that quotations are normally valid for a certain period of time. So when you are given a quotation, when you study it at the end, always check. It will always be written that this quotation is valid for 20 days, or this quotation is valid for 30 days, or for 15 days, or for 10 days. Meaning that if let's say the quotation was valid for 30 days, if I come on the 1st of January, I get a quotation, I cannot go back to the shop on the 15th of Feb with the very same quotation and expect to pay the same prices, because it would mean that that quotation now, it has expired. So if I want to buy, I need to obtain a new quotation because the prices have probably changed. So when you work with quotation, you must always be wary of the dates that are given, that it's only valid for a certain period of time. So with a quotation, you are not obliged to buy from that service provider. They'll just give you a list of their prices of how much they are going to charge you, and then as a client you will decide whether you want to make a purchase or not. And then we have a receipt. What is a receipt? It is a formal statement of goods or services that have been paid for. So shop A gave the principal a quotation, and then the principal decided that, you know what, I will go with shop A since they're giving me textbooks for a cheaper price than shop B. Then principal will go back to shop A and say, I'm buying these textbooks and then I've paid up the money. Once the money has been paid, then shop A will give a receipt to the principal as proof that the goods have been paid for. I hope I'm clear, girls and boys. Don't forget to interact with us on our WhatsApp number. It's 082 760 2630. Even if you don't have any questions, you can just send a shout out, your name, your surname, the name of the school, and just let us know if you are enjoying the lesson. And then, guys, all those terminologies are the terminologies that you can expect to come across when you are working with your financial documents. So the lesson outcomes for today's lesson, by the end of this lesson, we should be able to define the terminology that is used in the financial documents. We've already done that. The second outcome, we should be able to explain how the values in the financial documents were determined. You will see some of the financial documents that we are going to do today and others that you are going to come across in your classrooms. You'll be given a statement and there'll be letters or alphabets within the statement, and then already you must expect that the examiner will ask you to find the value of the missing of those alphabets. And then we should also be able to work with financial documents. So we'll see on the next slide the different financial documents that we are going to deal with. Guys, this is a list of the important financial documents that you're going to find under the section of finance, but these are not all the financial documents. And I want you guys to understand again that for a section of financial documents to be done thoroughly and to do justice on this section, we'll need about 3 or 4 hours. But because today we only have 1.5 hours, we are just going to touch on those ones that we are able to touch on. If we are unable to finish, at least you still have the whole week with your teachers at school. Then hopefully you'll be able to cover all the financial documents as expected from the KEPS document. So the important financial documents that we are going to touch, it is your budgets, your income and expenditure statement, invoice, quotation, the salary slip. The other word, guys, for a salary slip, it is a salary advice. So depending on the textbook, it is a salary advice, or the other books can say it is a pay slip. So what is a salary slip or a pay slip? It is normally a proof of income that an individual has to produce to show that they are working and they are actually earning an income. So a salary slip or a salary advice is normally produced by the employer. So every employer is obliged by law to give a salary advice to its employees. So a salary advice would be having the details of the company, the personal information of the employee, their name, surname, ID numbers, their appointment date. Appointment date is the date when the person started working, how much they are earning monthly, if there are any allowances, all the deductions that are taking place in this person's salary, and the net salary. So a salary advice is a summary of all that information that I just mentioned. And then also the till slips. Now, when you are given a classwork, or even if you are in the exam, and then you come across a financial document, guys, before you even go to your questions to see what is it that the examiner expects you to know, you must first take note of the following. You must get an idea as to what document you are looking at. Are you looking at an account statement? Are you looking at a bank statement? Is it a quotation? Is it the salary advice? That is the basic skill that you should have. And then secondly, you analyze the document. You go through the document. You ask yourself questions that, okay, if they've given me the gross salary, that is it the monthly salary? Is it an annual salary? And what would be the net salary? Did they give me all the deductions? If there are unknown values, the value of A, the value of B, are you able to determine those values, the value of A, the value of B? If they've given you maybe, let's say, UIF in the form of a percentage, Are you able to determine the value of the UIF using the given percentage that is there on the slip? So all those questions, what you are doing, you are actually preparing yourself, you are preparing your mind. It's more like someone that is going to war. You are training, you are getting all the ammunition that you can get so that when you go to the actual questions, you actually have all the answers. It's just that now you need to put the answers to the correct questions. So you must also look for the missing information. Like I said, that you would have the alphabets that are replacing the values. And if you see the values of A, B, C, D, you must definitely know that one way or the other, the examiner will want you to find the missing values. And then you look for critical information. If they've given you the gross monthly income, you must know that they might ask you for the annual gross income. And you must know the difference between the gross income and your net income. And then you must read the document carefully. And once, guys, after reading the document carefully, then you can go to your questions. And once you have answered a question, you need now to go back and ask yourself if you really answered the question. Most of the learners, they don't answer what was asked. For example, a question can say, Mrs. Zulu claimed that she earns more than Mr. Zulu. So you need to verify whether his statement was valid or not. And you verify using your calculations. So when you do that, you are going to perform your calculations. Most of the learners, they perform their calculations, and then after finding the answer, they stop there. But then wait, did you really answer the question? Because the question was saying you must verify whether his statement is valid or not. So you need to answer the question to say, after my calculations, therefore the statement was valid, therefore the statement was invalid. That is how you would know that, okay, I've answered this question, then I can move on to the next question. So let's look at an example of a till slip here. I know most of us are very familiar with till slip, especially those people that have been doing Maths Lit from grade 10. So when you have a till slip like this is what you need to look out for. You'd always have the name of the store. Here is ABC Spa, and the address of the shop. We know that it's in Pretoria, though we don't have all the details where in Pretoria. There's the contact details of the shop. In case maybe you are not happy or you want to find out something, you can always call the shop and inquire. And then these are the items that this person bought. They can ask you in the exam again that how many items were bought. So you'll be guided by the prices here to know how many items were actually bought. Another important skill is to be able to read and interpret a till slip. It sounds easy, but most of your peers are struggling to read and interpret a till slip. So here, this person bought a C complete meal. And then they bought 0.342 kilograms, and they bought it for how much? For 23.94 cents. But this meal, 1 kg of this meal actually cost how much? 69.99 cents. Remember, per kg means for 1 kg. So 1 kg of this meal cost 69.99 cents. But this person didn't want 1 kg. They only wanted 0.342 kilograms. And that is why they paid 23.94 cents. And then they bought a BCAT booster bar. A BCAT booster bar, one of it cost 2.99 cents. But this person didn't want one. They bought how many? They bought 2, which is why now they paid how much? They paid 5.98 cents. So very, very important for you to be able to read and analyze your till slip. And something very interesting here, we have Albany Supreme Loaf. This is bread. And then the price of Albany is 5.29 cents, but it's not a normal price. It has an asterisk there. I hope all of you can see. It has an asterisk next to it. What is the meaning of this asterisk? It means that the bread, the loaf of bread, is actually 0 rated, meaning that we will not pay VAT on this bread. So if you can check on the till slips at home, take even if it's a ShopRite slip, you will see that you will have items and the prices. And there will be some of the items whose prices have an asterisk on them. And some shops, they don't use an asterisk, but they will use a hashtag. So if there is an asterisk or there's a hashtag, then you know that those are the 0 rated items, meaning that you will not be charged VAT on those particular items. And that is the case on today's item. And then we have here 6 balance due. 6, it means that the items that were bought is actually 6 items that were bought. Remember, there were 2 bars of the booster bars, and then there were 2 orange juices that were bought. So a total here, that is why it is 6. The items that were bought were 6, and then the balance due, it is 39 rand 68 cents. And then the other thing that you need to look out for, the method of payment that was used. This particular person paid using what? Using cash. The examiner can ask again what type of method, what method of payment was used here. So here the answer would be cash, and it's not always going to be cash. Sometimes the person can use a card, electronic. They can use the electronic method using their card to pay for the items. And then guys, we have the VAT here. Now this is where now they actually break down the issue of VAT on this section, that the VAT is calculated on 34 rand 50 cents. Where is the 34 rand 50 cents coming from? For all the other items excluding the bread, because you are not going to be charged VAT on the bread. And the VAT that is calculated on these items, it is 5 rand 18 cents. The bread, we have 0 VAT, those ones that don't have VAT on them. It is the price of bread, which is 5 rand 29 cents. And the VAT value is 0, like I explained here, that you will not pay VAT on the bread. So the total VAT value, it is 5 rand 18 cents. So the change here is 10 rand 30 cents. Remember, this person paid for how much? With how much? With 50 rands, and the total is 39 rand 68. And then their change is 10 rand 30 cents instead of 10 rand 32 cents, because now the 2 cents was actually rounded. There was a rounding of 2 cents. As we know that we no longer work with cents. I know none of the grade 12 learners that we are having in this class have ever seen a cent in their lives. So you can't, if you don't even know what I'm talking about when I'm talking about 2 cents. So, and then the other thing, guys, that you need to look out for in your till slip, the cashier name here, we have the name, it is Samantha, and then the date on which these items were purchased, it was on the 15th of January 2021. And then here another important aspect, it is the time on which these items were purchased. So what did I do here? I was analyzing the document that is given to me. I have not even looked at the questions. So I was getting myself ready. I was preparing for war. So when I go to war, when I go and answer those questions, I'm ready. I have all the information that I need. Mine is just to check which question wants what, and then I'm ready. I can answer any question with all this information that I've just analyzed here. So guys, when you go into the exam, this is what you will also do. You analyze your document before you even look at the questions that are given to you. And then always remember, we did this in grade 10 and 11, that VAT is charged at 15%. And you must always remember that VAT stands for what? Value added tax. You will be asked to explain what does the acronym VAT stand for. So please remember, it stands for value added tax, and it is calculated at what? At 15%. And then another example of financial document, it is your pay slip. Remember, I said the other word for pay slip, it is your salary advice or your salary slip, depending on the textbooks that you guys are using, and again, depending on which question paper you are working on. So for today, on this particular slide, we are going to refer to it as a pay slip. When you analyze your pay slip, you are going to check for the personal information of the person. And in this case, our client is Mr. Mate, is PT Mate. So we know that the initials is PT and the surname is Mate. The pay date for this salary advice, it was 2016-06-30. It means it was on the 30th of June. This should immediately tell you that it means this person is getting paid at the end of every month. What is this job title? He's the head of department. We normally say he's an HOD. And where does he work? He works for the Gauteng Department of Education. And then you have his bank account number. We have the name of the bank that is using. Mr. Mate is using Standard Bank. And then we have his number of medical dependents, his gross salary. Guys, remember what is gross salary? Gross, G for grade. It means a grade salary. It means salary before any deductions. And gross salary includes all the allowances and the benefits. And then we have the deductions. The deductions is all those monies that are subtracted from your gross salary. All those contributions that you are making towards tax, towards your UIF, your medical aid, all those monies are called what they are called? Deductions. And then you have your net salary. Your net salary, it is your salary after the deductions. So if you want to calculate net, if you want the formula for net, you will say net is equals to gross minus deductions. If you take your gross salary here and then you subtract your deductions, it will give you what? It will give you your net salary. That is how you determine your net salary. And then we have a basic salary. Remember I said your gross, it is your grade salary, it is your basic, including all the benefits. The benefits is your bonus, your allowances. If you add everything, it becomes your gross salary. That's why I said G for grade, your grade salary. It includes everything. Whereas your basic salary, it is the salary that you agreed upon on paper with your employer, that we are hiring you and we are going to pay you 26,309.58 every month without any allowances, no bonuses and anything. That is your basic salary, excluding the overtimes and everything. So that is your basic salary. It's just a clean salary with no bonuses, no allowances, nothing. And then guys, we have what we call notch. This notch is no notch salary. What is notch? For you to find notch, you need to take your basic salary and you multiply it by 12. And then it will give your notch salary. It means that salary that you agreed upon with the employer without any extra benefits for the year. It gives you what you call what? A notch salary. So to get notch, you will say your basic multiplied by 12. Where does the 12 comes from? It is 12 months in a year. So your notch is actually your basic salary for the whole year, for 1 year. Guys, remember to interact with us on our WhatsApp number 082-760-2630. You just send a WhatsApp, send a shout out. Let us know if you're enjoying the lesson, if you have any questions, or you want to add on to something that I might have missed. You are more than welcome to do that. But please, no phone calls, guys, no video calls. And then, guys, yes, I spoke about the notch, the gross, the deductions, net salary. And then we have the GEPF. What is the meaning of GEPF? It actually stands for Gauteng Employees Pension. I'm sorry, not Gauteng, I'm sorry. It's Government Employees Pension Fund. So GEPF is normally for those people that are working for the government. It's a pension fund for the government employees. For the private sectors, they just refer to it as pension fund. So because this particular person that we are dealing with now, they are working for the government, that is why now the pension fund for government employees is referred to Government Employees Pension Fund. So the pension fund, guys, it is the amount of money as the pension fund, it is the amount of money that you as an employee, you contribute on a monthly basis. And that money is saved when you retire, when you reach the retirement age, whether it's 60 years or 65 years, then you will get that amount as a lump sum. It was saved up for you depending on the number of years that you have been working. When you get it as a lump sum so that it can now take care of you when you can no longer work. Remember, when you reach the age of 60 or 65, you are old, you are tired, you are no longer able to work like you used to when you were younger. So that money for pension, you are saving it actually towards your retirement. When you retire, it means when you stop working, then that money can take care of you. So that is what is meant actually by the pension fund, or in this case, the government employees pension fund. And the pension fund is normally calculated at 7.5% of the basic salary. Not always, normally calculated at 7.5% of the basic salary. So the examiner will always guide you. When they want you to calculate the pension fund, they will always guide you that you should use 7.5%, or they will tell you the percentage that they want you to use. So you don't really have to crack your head here and ask yourself, which percentage am I going to use? You will always be guided in the exam. And then here is a quick quiz on a pay slip or a salary advice. We have a salary advice. Remember I said the salary advice or a pay slip will always have the details of the organization. It will have the personal information of the employee. So what is the name of the organization here? It is JJ Wholesale. So this particular person, what is the name of the employee? It's Nick Ndlovu. Ndlovu works for JJ Wholesale. And then that is Nick's ID number. We have the ID number. We have his home address. And then where he works. Is it a permanent position? Is it a temporary position? So that information is here. He is a permanent member of that organization. And his salary, he receives his payment on a monthly basis. It's not on a weekly or fortnightly. And then the date of payment, for this particular pay slip, it was the 31st of October 2021. So this already tells us that this person gets his salary at the end of every month. And then since he's a permanent member, he's working, he also contributes towards tax, and there is his tax number. Does he have dependents? What are the dependents? Is the people that are depending on him for their well-being, or the people that he's maintaining. So he has 3 dependents. We don't know. Maybe the 3 dependents is his 3 children, or it's his wife and the 2 children. But he has 3 dependents. And then the bank that he's using. Remember, when he's paid, they don't give him the money cash or in an envelope. No, the money must be deposited into his bank account. And the bank that he's using Post Bank. And this is his bank account number that J&J Wholesale is going to use to deposit his money. And then the date of the next payment. Remember, this salary advice is for the 31st of October. He was getting paid for the 31st of October. So the next payment is going to be when? On the 30th of November. Like I said, that this person is getting paid on a monthly basis. Now his basic salary, the salary that he gets, clean salary, no allowances, no bonuses, nothing. For this particular month, he got 10,000 rands. And then the total income, it's still 10,000 rands. And in this case, in this special case, because there are no allowances, no bonuses, nothing, our basic salary is actually the same as the gross salary. So the basic salary is 10,000. The gross salary is also 10,000. Let us look at the deductions. The deductions, this person is contributing towards pension. Remember, I said, what is pension? Pension fund. It's a retirement. It is the money that you put away, you save, so that when you are older and you are unable to work anymore, then this money that you've been saving is the money that will help to take care of you for your basic needs and services, because you still have the same needs. You still have to pay for DSTV, you still have to pay for water, you still have to buy clothes. If your kids are at school, you still have to pay for their school fees. No one is going to say, yo, ma'am, now you are old. No, life must still go on. So this money for pension is the money that is saved towards retirement. And then the union membership, this person, it means that he's a member of a union. Remember, there are different unions. There is SADU, there is Pop Crew, there's NAPTOSA. So, but we don't know the name of his union. The only thing that we know is that he belongs to a certain union. And for you to be a certified member of a union, there is a monthly contribution that you must make. And for him, he pays how much? 50 rands every month. And then for tax, since he's earning an income, he must contribute towards income tax. And how much is he paying? He's paying 1,250. And then for UIF, what is UIF? It is Unemployment Insurance Fund. I'm not going to go too deep with this one because there will be a section where we do it in detail, especially when it comes to the section of income tax. So for UIF, he contributes 100 rands every month. And then the total deductions, when you add all these values, when you add all of them, they give you a total of 2,065. Now this is the total deductions. And then a net salary. Remember what is net? The salary after deductions. The money that now he takes home. The money that goes into his bank account. When he clicks on the 31st, and then he say, hey, my salary is in. It will be how much on the bank account? It will be 7,935. It means from the basic salary 10,000, they've taken out the deductions of 2,065. Now in his bank account, the money that will reflect will be how much? 7,935. Guys, do you see what I'm doing here? I didn't even look at the questions. I told you this is a quiz, meaning there are questions, but I don't even want to look at the questions. I'm first identifying the document that I'm given. It's a pay slip, and then I'm going through every single item because I know whatever question that is going to be asked, the answer is in this document. So that is a key. When working with financial documents, you must know that all your answers are in the financial document. You must just analyze it step by step. Don't be in a hurry. All your answers are there. And now once we've analyzed our document, now we can go to our questions. Let's look at the first question. A, what is the gross income Nick earns every month? It takes you back now to the definition of gross income. We said gross income, it is the great income before any deductions. So let's go back to the pay slip. Before these deductions, what was his income? His income is 10,000. So the answer here, the gross income would be how much, guys? 10,000 rand. That is correct. So the gross income would be 10,000 rands. I hope you guys were getting the same answer as well. If there were allowances, maybe there was a car allowance or a housing allowance, we were going to add that allowance to a 10,000, then it would give us a gross income. But in this case, there are no allowances, so our gross income is just a clean 10,000 rands. And then the second question, this payment slip is for the, remember I said this is a quiz, so it needs to be fun. We just choose the correct answer. This payment slip is for the first option, wages for a contract worker. The second option is the salary of a permanent worker. Remember we analyzed this, ne? And then the third question, how many dependents does Nick have? So from the pay slip, you need to be able to check how many. Remember I said the dependents are the people that are depending on Nick for their survival, for their well-being, the people that he's maintaining. And then the last question, Nick's bank account number is 376398019 or the second option. So I said to you, when you're working with financial documents, all the answers are in the financial document. So yours is just to analyze the financial document, understand it, and then you go to your questions. Guys, I'm going to give you a chance to answer these questions. Please do interact with us. Send your answers to 082 760 2630. We are going to take a 30-second short break. Please don't go away. Answer the questions. Give me the answers, and then we'll discuss the solutions when we come back. Don't go away.
Excellent. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you are gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, guys. We're getting your messages. Notile and Tandazile, guys, you get your WhatsApp messages. They say they're enjoying the lessons. And there's another one from Tembisa West Secondary School. We also got your message. Guys, we're so happy that you guys are enjoying. Please keep those messages coming. And now, guys, let's go to our question again. I'm now going to give you the solutions, and then you will check if you got the correct answers. And if you didn't get them right, it's fine. There's still many more questions that are coming. You will try again. So the first one, this payment slip is for the wages for a contract worker, or is a salary for a permanent worker. Remember, when we were analyzing this payment term, they said it is permanent. So the correct answer here, it is a salary for a permanent worker. I hope you got it right. And then the next question, how many dependents does Nick have? Remember, I said the dependents, he has 3 dependents. And I said we don't know whether it's a wife and 2 kids or it's just 3 children. So Nick has how many dependents? The correct answer is 3. I know all of you got this one correct. Big ups, guys. And then C, Nick's bank account number is. Guys, you really don't have to think about anything here because all your answers are on your financial document. Like I said, that with a financial document, the key is to analyze it, understand it, highlight whatever crucial information because all the answers are there. Remember we were given the name of the bank, that it is Postbank. They also gave us the account number. Now looking at the account number, the last 3 numbers, it's 720. So when I go here, I'm just going to look at the last 3 numbers. 720 is this one. So the correct answer is the second option. Guys, I hope you're having fun because I'm really enjoying this. Now, the next question, we are still working with the same payslip of Mr. Nick Ndlovu, the same information that we've analyzed. So, in what evidence is there that Nick belongs to a union? Remember, I said we have different unions. The one that I know you guys know the most is the SADU, and NAPTOSA, because most of our teachers are members of either SADU or NAPTOSA. So what evidence do we have that this guy is a member of a union? First option, he contributes to UIF monthly. UIF, remember UIF is what? It's unemployment insurance fund. So UIF has nothing to do with union membership. The second option, he pays union membership monthly. Is it true? Yes. If you go to the statement there is the union membership of 50 rand. So the correct answer here, it is the second option. And then F, how much money is Nick saving for his retirement every month? First option is saving 100 rands. Second option is saving 670. How do you know that he's saving for a retirement? Again, the answer is on the pay slip. Let's check the deductions. The first one, it is what it is. It is pension. Remember, I said pension normally is called pension fund. It is the money that you put away, you save for your retirement. Your retirement age, it is that age where you cannot work anymore because you are too old. It means now your body cannot carry you anymore. You are not as active as you were when you were younger. So that money that we contribute is a pension. We're contributing it towards what? Towards our retirement. So in this case, you just look at the pension, and what is the contribution amount? It is 670. So between option A and option B, which one is the correct one? You got it right, guys. It is 670. And then H, how much is paid in Nick's account? Remember now, the amount that is paid in the account, it is the money that now he takes home to say, ding, ding, the money has logged. Yo, I got paid. This is the money that is reflecting in the bank account. That money is the money after all the deductions. I'm sorry, guys, about that. How much is paid in Nick's account? The money that is now clicking in his bank account to say that, yo, I got paid after all deductions have been taken out. That is then the net salary. So this is the money that will be paid in his bank account. This is the money that is going to reflect in his bank account. And how much is the money? Yes, guys, you can say it. It is 7,935. That is the money that will be paid in his bank account. Our next activity, guys, is on a budget. Remember when I started with the explanations of the terminology, I said budget, it is not your actual amount that you spend. It is not the actual money that you are going to receive. A budget is what you are planning, what you are anticipating. And you don't always get what we anticipate. Sometimes you get more, sometimes you get less, sometimes you get the exact amount that we anticipated. So in this case, we have a budget for a general store, and this budget is for the month of July and the month of August 2021. And it is divided into two sections. There is the budgeted income. It means this general store is expecting to receive this income for July 2021. This general store is expecting to receive this income for August 2021. They did not get this income. They are expecting to get it. So they are variable, they are fixed, they have variable interest on saving sales. They are expecting to get this amount. So for July 2021, the total income that they're expecting to get, it is 47,750. And then for August 2021, they're expecting to get the same income of 47,750. And then we have the section of expenditure, what they are expecting to spend. For July, they're expecting to spend, they have different expenses. They have the fixed, they have variable, and they have irregular. Guys, this is grade 10 and 11 work. You must know the meaning of a fixed expenditure, the meaning of variable expenditure, and the meaning of irregular expenditure. Your fixed expenditure, it is those expenses that stay the same on a regular basis. In this case, we can say on a monthly basis, like they don't change. And a perfect example that they gave here, it is rent. If you have an agreement with the landlord that for rent, you are going to pay 3,000. In this case, they are paying 5,800. It means every month they're going to pay 5,800 for rent until maybe they decide on a new contract next year or after 2 years. So that is an example of a fixed expenditure. It's expenses that stay the same on a monthly basis. And then we have variable expenses. Variable expenses are those expenses, they don't stay the same, means they fluctuate. This month it can be lower, next month it can be higher. An example, a perfect example of a variable expense in this case is a telephone account. Because if you are running a company, you have a landline telephone, you are not going to call the same people this month as the same people that you are going to call, that you called last month. It won't be the same. Even if you were to call the same people this month as last month, you will not speak exactly the same minutes and the same seconds as you did last month. That is why the bill for that telephone will not be the same. Another example of a variable expense would be your municipal account, because the amount of water that you used this month will not be exactly the same as the amount of water that you used last month. That is what we mean by variable expenses. It fluctuates. Sometimes it can be high, sometimes it can be low. And then the last type of expenditure, it is your irregular expenditure. These are your once-off type of expenses. They happen once off. It will not happen all the time. And an example here of an irregular expense for this company, it would be bonuses for all their workers. As a company, you are not going to give bonuses to employees every month. No, bonuses are once-off items. They are once-off expenditures. So I just wanted to explain that, the difference between the three expenses. So now let's look here. The total expenditure for July, they are anticipating that their total expenditure would be 47,091 rands. And then there is either a surplus or a shortage. How do we know whether it's a surplus or a shortage? The value is positive. So if the value is positive, it means they have a surplus. Okay, even if the value wasn't positive, you check their total expenditure against their total income. So when you take the income, you subtract the expenditure, you will get a positive 659. And this already to tell you that for July 2021, they are expecting to have a surplus of 659 rands. And if you come to August, they are expecting to have a total income of 47,750. And they are expecting to have an expenditure of 55,641. And already you can see the red lights here. What are the red lights? The expenditure is more than the income. Every business aims to make profit. Every business aims to get more income than their expenditure. So here we are having a problem because our expenditure for August is more than the income for August. And if you look at the difference between income and expenditure, you'll see it's negative 7,891. And that already tells you that this business is running at a loss. It has a shortage of how much? Of minus 7,891 for the month of August 2021. I hope we understand, guys. Do you see what I'm doing again here? I haven't even looked at the questions. I am analyzing my financial document. I've identified that I'm giving a budget statement. And then I've checked in my budget statement what is happening. I've checked my income against my expenses. Are they making a loss? Are they making do they have a surplus? Do they have a shortage? The items that are in the statement, I've done all of it. I'm preparing for war. Now that I'm ready, I have my guns, I have my knives, I have everything. Then I can safely go and I can go to war. And where is war? I can go to my questions. Again, it's a quiz. It's supposed to be fun. I hope you guys are enjoying. I hope you already have the answers for this. So a business compares budgets of different months for planning purposes. As a business person, so you need to tell us whether this is true or false. So as a business person, yes, this is true. Why is it true? For you to be able to plan ahead, to see whether your business is in danger or you are coming all right as a business person, is very important to always compare your budget of the previous months. And then it also helps you to plan ahead for the coming month, to say, okay, the last 2 months, my income was around 50,000. It means the next coming months, I can expect to get plus minus 50,000. And if I'm not happy with my income, then I need to try and expand my market and try attract more customers. So this statement is absolutely true. The second question of the quiz, the telephone budget for August could indicate that the business planned to follow up on outstanding clients account. Let's go to the telephone account. We see the telephone account for July. They are anticipating to spend 900, but if you go to August, they are anticipating to spend 2,400. So what could be the reason that last month for July they think they'll spend 900, but for August they'll spend 2,400? So the only reason that makes sense here is this one that is given on the statement. It means that they are planning to follow up on the outstanding clients account. Remember, the outstanding clients account, it means is their clients that have not paid them. So they need to call them and ask them that, hey, Mr. Gekana, when are you going to make a payment? You owe us this amount. When are you going to pay? So if they make more of those phone calls, then it means now their telephone bill is going to go up. Hence the estimation that they are going to spend 2,400 rands on telephone. So to answer this quiz being, this is absolutely true. And then see, still on the same budget, the minus in front of the 7,891 in the August budget. Let's see, where is the 7,891? This is the 7,891 that they are referring to. And we can all see that it is minus, it is negative. So they are saying that this minus in front of the 7,891 in the August budget indicates a surplus of 7,891. Remember when I started this section, I said that when the money is taken out, when you are having a credit, when you are owing the bank, when you are running at a loss, it will sometimes be indicated by a minus. So a minus can never, ever, ever mean surplus. It will never happen. If it's a minus, it's definitely not a surplus. Remember, surplus means what? It means extra. So minus cannot mean extra. So in this case, this statement is false. I hope we are all good and following, girls and boys. Remember to keep those messages coming. And then D, the business can use the surplus for July in the budget for August to reduce the shortage in August. Let's go back to our statement. Remember, for July, the business has a surplus. A surplus of how much? Of 659. And then already in August, they are anticipating to run at a loss of 7,891. So yes, they can use this surplus since it's the same business and add it on to August 2021 to help and cover the cost, since they are already anticipating that they'll be running at a loss for August 2021. So yes, this statement is absolutely true. They can use last month's surplus to supplement next month's shortage. And then E, the amount for sales is the same for the two budgets because it represents the actual sales. Let's look at the sales. For sales for July, it is 45,000. And then sales for August, it's also 45,000. We agree the sales are the same. It's 45,000, 45,000. So what is the statement saying? The amount for sales is the same for the two budgets because it reflects the actual sales. Guys, I am so interested in your answers for this one. Can you guys please just send in your answers for E before I give you the answer? If you guys were listening, I would know. Just send in your answers and then I'll give you the answer to this one. So is this statement true or false? I'm not going to give you the answer for now, but I will go to F. Based on the budget for July, if the rent is increased to 6,100, there will still be enough funds available to pay rent. So if you look at the budget for July for rent, how much are they expecting to pay? They're expecting to pay 5,800. So if the rent was increased to 6,100, Will there still be enough funds to be able to pay rents? Let's look at July. Remember July, at the end, they're having a surplus of 659. So let's see that if the rent is increased to 6,100, they actually increase the rent by how much? So you are going to say the 6,100 minus the 5,800. Do it on your calculators then. I'm also doing it on my calculator. 6,100 minus 5,800. It gives me 300. What does this 300 means? It means they've actually increased the rent by what? By 300 rents. So to answer the questions, there will still be enough funds available to pay rent. Yes, there will still be enough funds to pay the rent, because remember for July, they had a surplus of 659. So if they increase the rent by 300, they'll still have enough money. It won't be a problem to increase the rent. Going back to E, to this one, guys. Now you can compare your answers. The amount for sales is the same for the two budgets because it reflects the actual sales. Guys, the answer here is false. Why is it false? It cannot reflect the actual, because remember I said it's a budget. And then what is a budget? A budget is more like a wish list. It's what you are anticipating. It's what you are planning. So what you are planning cannot be the actual sales. So here we are anticipating that the amount for sales will be 45,000 for July. We are anticipating that the amount for sales will be 45,000 in August, but that is not the actual reality. That is not the actual sales. It is just what we are planning. It is what we are anticipating. It is a wish list. So here the answer is false. It is not actual. Remember, as soon as you speak about budget, we cannot talk about actual, because budget, it is a plan on how you are going to spend. It is a plan of how much you are planning to receive. And then we have an income and expenditure statement. Again, guys, as we can see that right now, we are just analyzing the budgets, the income and statements as financial documents. You will see in term 1, once you do go deeper into finance, you are now going to work in detail with budget statement, with budgets. You are going to work in detail with income and expenditure statements. For now, we are working with them just as financial documents. We're not going into deep with them. So here we have a financial document again. I said, remember, before you go to your questions, you identify your financial document. So this one that we're working with, it is an income and expenditure statement of what? Of a general store. For when? For June 2021. So here we have our income. There is income section, income from sales. They got 38,754. There is the interest from savings. It means this company has some savings. So on that particular month, they got interest from that money that they were saving, and their interest was 2,449. So the total from their income was 41,203. So this is the total income for this general store for that particular month of June. And then the expenditure, their expenses. Do you see how long their list of expenses is? So they have to pay rent, 5,800. They have to pay for insurance, the salaries of the people that are working there, UIF. Remember? Okay, but let me not confuse it with UIF. It's fine. We'll do it in detail in the section of taxation. For travel allowance, material costs, everything in total. The total expenditure is 41,125. Guys, look at this company. Their income is 41,203. Their expenses for June is 41,125. This business is not doing that well. But we're not going to judge. It's okay. We've analyzed our statement. Now let's go to our questions. That is what you do all the time. Whether it's at classwork, it's at class test, control test, assignment, exam. Before you go to your questions, you analyze your document. You take out as much information as you can before you go to the questions. A. What would the financial manager of this business say in the report if this was the income and expenditure statement provided? Whew. Imagine you're a financial manager and then you need to comment on this statement. First option, the financial manager will say the business can hire more workers. Can they even afford to hire more workers? Look, these people are not making enough money. They hardly making any profit. So this one is out. You cannot advise them to hire more workers. Let's look at the second option. The business must use savings to buy new vehicle. Which savings? Do they even afford to have any savings at this point? No. So that second option is out. Let's look at the third option. The business must increase their sales. Absolutely. For this business to be operational, for this business to function, they need to increase their sales. So whatever they are making here, the income from sales, it is not enough to cover all their expenses. So for them to be stable, for them to start making profit, enough profit, they need to now increase their sales. So as a financial manager, this is the advice that you should be giving this business. And then the second question, how can the business increase the difference between the income and expenditure? Guys, at this point, the difference, remember in Meslit, when you talk about the difference, we're talking about subtraction. At this point, the difference is 41,203 minus 41,125. Please do it on your calculators, guys, and then we can compare our answers. 41,203 minus 41,125. The difference is only 78 rand. Imagine for such a big company. So they want to know how can the business increase the difference between income and expenditure. Since it's a quiz, you are given the options. The first option, spend the interest from savings on lunches for the workers. No, it can't be. It's not possible because they don't even have that luxury. The interest from savings is already spent on covering the expenses. So it's a no. It's a no. The second option, they must lower their variable costs. Remember I said what is the variable cost? Is those costs that don't stay the same on a monthly basis. And a practical example that I gave was your municipal account. The money that you pay this month for water will not be the same amount that you pay next month. And then yes, it is possible to lower your variable costs like your municipal account. So you can monitor the way that this company is using water so that you can reduce your water bill. Even the electricity, you can find ways to save on electricity and then you reduce your electricity bill. So let's check here. Yes, there is a municipal account, so they can manage, they can try to be strict on their usage of water and usage of electricity. That will save them money. The other variable cost here, it is the telephone. They can monitor the usage of telephone. Try and limit the number of times which phone calls are made, and then also try to shorten the length of the phone calls that are made. So in that way, they are able to save. So I think lowering the variable cost is an option to help increase the difference between the income and the expenditure. And then the third option, pay less tax. Unfortunately, this one, it is beyond the company's control. You as a company, you as an individual, you don't decide that I want to pay this amount for tax. Nope. It is the government that decides, the SARS that decides that since you are having this amount of income, then you are liable to pay this amount towards your taxes. So the correct option here, it is the second option. They must lower their variable costs. And then C, finding another supplier may reduce the cost due to cheaper products or reduce the delivery fees. Remember, this company is working with a certain supplier, and then they are honestly spending so much money. The supplier is charging them 9,500 for material. It's just, and then for traveling there's 525. So maybe if they could find a different supplier that can give them the same material, same quality, same quantity with a lesser price, that may also help in their business. So this statement, guys, I agree with it, and I'm sure you also agree with it. This is absolutely true, that finding a different supplier, it may reduce their cost due to cheaper products, or it may even reduce their delivery fees. And then D, which of the following will help increase their income? Remember, their income is only how much? 41,203. So which of the following will help increase the income? We have the first option, expand the market area. What does it mean, guys, to expand the market area? Let's say I am selling maybe clothes, and then I stay in an area in Sebokeng, some area in Sebokeng in the Vaal. So if I feel like I'm not making enough profit, when I expand my market area, it means now I need to expand it to out of Sebokeng. I need now to go to other places. I need to go to Tembisa and find customers. I need to go to Soweto and find customers. I must go to Alberton and find more customers. So that is what is meant by expanding your market area, not focusing on just one small area. So if you want to increase your income, you must also expand your market area. That is the first option to help increase the income. The second option, rent a bigger building. This does not make sense, because if you're going to rent a bigger building, then it means you're going to pay more money for rent, because the bigger the place, the more money you will pay for rent. So this one is a big no. Remember, here we are looking at increasing the income. So this one is a big no. And then the last option, start work early in the morning. I don't think this has anything to do with increasing the income, because really, whether you start in the morning or you start at 9 o'clock, the customers that you are dealing with, they know when to come to you, when they need you. So in this case, the most appropriate answer, the one that makes sense, is the first option, that for them to increase their income, they need to expand their market area, move out of their comfort zone. I hope it makes sense, guys, and I hope we all agree on this one. Remember to keep in touch, guys, on our WhatsApp number 082 760 2630. And then the next financial document, guys, it is your quotation. Remember, I said a quotation, they're just giving you a list of the items that you want to buy, and then they will show you what the items are costing. And then one thing that you need to take note of is that quotations are normally valid for a certain period of time. And then the other thing, guys, that I want to emphasize is that when you are given a quotation, you are not obliged to buy from that supplier that gave you a quotation. So if they give you a quotation, you are not obliged to go and buy from them. The quotation just gives you an idea of the things that you want. This is how much they are going to cost you. So if you feel like you won't afford them, this is too expensive, you are more than welcome to go to company B and request a quotation. Then you can compare the two prices, and then you choose the best company for your affordability and for your needs. So here we have a quotation from ABC Wholesalers. Here is their address, and this is their contact details. And then this quotation is for who? It is for the general store. So it means the general store requested a quotation from who? From ABC Wholesalers. Now let's analyze our quotation. ABC Wholesalers wants to buy what? They want to buy 1 kg rice. And then the price per item of 1 kg rice, it was 12.95. But look at this 12.95. It has an asterisk. Remember what is the meaning of an asterisk? It means this is a 0 rated item. So you will not be charged VAT on this 1 kg of rice. But here now the amount has changed. It moved from 12.95 to 155.50. 40 cents. What could be the reason? It is because these people did not just buy one kg. They bought 12 of them. So to get this 155, they said 12 multiplied by 12 rand 95 cents to give us a total of how much? Of 155 and 40 cents. And then the second item that they bought is 500 gram flour. It is 14 rand 95 cents. It is also exempted from VAT, but then they are buying 10 of them. So you say 10 multiplied by 14 rand 95 to give you 149 and 50 cents. So with a quotation, you must always check the number of items that are given, that the person is purchasing, for you to get the final amount. And then we have the cost before VAT. It is 1,536 and 65. And then we have VAT at 15%, which is 184 and 76. Remember the VAT, there are those items, the zero-rated items that are indicated by an asterisk here. And in some financial documents, the zero-rated items might be indicated by a hashtag sign. And then we have the total 1,721, including the VAT. Very important, guys. They saying here, all quotations are valid for 30 days from the date of issue. So this quotation was issued when? On the 31st of January. And then if it's valid for 30 days, it means it's valid from the 1st of Feb. Since it was 2021, we know that Feb, it ended on the 28th, I think. On the 28th of Feb, it means now you have how many days then? We have 28 days. So to get to 30 days, you will say 29, 30. So it means this quotation is valid until the 2nd of March. I hope you guys understand, because they said it is valid only for how many days? For 30 days. So it means now if you go after the 2nd of March, you can no longer go using the same quotation. You must get a new quotation. Sometimes the prices will still be the same, but sometimes the prices would have changed. So it's very important that when you get a quotation, you check the dates. And guys, you can use this skill to help your parents. I know most of your parents, they like to join the stock fair, the grocery stock fairs, and normally around June, they go and make quotation from those wholesalers. And then you must explain to your mom that, Mama, this quotation is valid just for 30 months. So you can't keep this quotation and then in December, you want to go back with the same quotation to purchase your stock fair food. It won't be valid. Around November, you must go back to the shop and request a new quotation, because the prices would have changed. Are we okay, guys? We are almost towards the end of our lesson, guys. So a quick quiz here. This quote will be valid until the 4th of March. We've already done this when we are analyzing our information. The answer is false, because it's only valid until when? Until the 2nd of March. If you go then on the 4th of March, it will not be valid. And then the star. The star means that those items are on special. Which items have the stars? The 1 kg rice and the 500 gram flour. True or false, guys? I'm sure all of us are shouting that it is false, because we know that if item has a star on it, it means that it is zero rated. It means that you will not pay VAT for those items. Girls and boys, we have come to the end of our lesson. I really enjoyed this lesson, guys, and I hope you guys have also enjoyed. We are still going to have more of these lessons. Please tell your classmates to join in. Tell your friends to join in. There are still so many topics that we are going to do. I had fun. I hope you guys had fun. But most importantly, I hope you guys learned from today's lesson. And thank you so much for watching this lesson. Please remember to sanitize, wear your mask, maintain your social distancing, keep safe. See you next time.